What is good, guys? Welcome to day 6 already of Anomaly's sequence. Today, a little bit of a different video. Today, we're going to be going over a little bit of a check-in and going over my own trades last week. The mistakes I made last week. There were 2 mistakes. Who would have thought? I lose as well. But also going over exactly why I managed to minimize, let's say, my actual risk. And I want to showcase you guys what I did in my weekend as well. Talk to you guys about what I did in my weekend. And I'm hoping that this check-in acts a little bit as some sort of boost of morale, boost of confidence, because many of you need that in order to actually continue a sequence like this, in order to actually make sure that you have enough like dopamine to get to a point that you can get new information for the future topics that we're going to go over. So let's start off with a little check-in and kind of commence with the fact that I hope that you took my advice from last week, applied it to this weekend, getting that movement in, kind of getting into that winter arc lock-in period as well, which I find very, very important. I'm taking it to the next level. Once again, I've broken plateaus after plateaus all of July, August, and now in September as well. For me, that comes in the form of just running. I've been running quite a bit, doing back-to-back, quote-unquote, long runs, whether that's 9, 10, 11K. You know, there are obviously guys that might be watching this video that are doing ultra marathons, sure, but you get the gist. I'm amping up my mileage, my kilometers, and we're sitting at a nice 40 kilometers a week, acting as a good baseline. And I'm not really training for anything even. So I take the weekends to really deload in that sense. You're asking yourself, okay, this guy deloads by doing 2 long runs, but then also coupled with infrared and an ice bath to get my hot and cold temperatures, all that good stuff. I'm not the biggest, firm believer of the whole go fully spaz out and wake up super early and do everything meticulously. No, you don't need to. You just need to find what works out for you. But I do really, really believe that you need to do something more than what you're doing now. And that is the biggest key takeaway, whether that is locking in your daily steps, getting more runs in, getting more active. This is a check-in reminder that if you haven't done so, pick it up again. It's okay to fail. You can make a mistake once, but breaking that rule, breaking that commitment twice is already the habit of a new pattern, and that's what you want to avoid. So you can slip up once. That's it. Slip up once is totally fine. Right? Then pick it up again and then get back to it, right? You want to ingrain these new habits, these core identities of who you are, and solidify them. And in order to do that, you need to practice them daily. So that's kind of a check-in on my side with what you are doing, hopefully. Let's go over just the charts a little bit. I want to go over preparations for next week, what you should also be doing, the way that you should enter the charts on a Monday. My strategy, right, is very, very simple. I'm giving you guys some gems already here. I don't trade Monday London open. I really wait for New York much later in the day, if anything. The reason for that being, you can already see today is a prime example that all your Asia players here already got nacked. M15, M5, M3, however you want to pin it out. But this is exactly one of the reasons why trading just a model, whether that's an Asia model or whatnot, fails, right? If this is your Asia high, you can see that this is where people are entering, looking for shorts. Off of the imbalance, boom, shallow shift, maybe here, maybe they're like, oh, let me wait one more time, and then you can already see that M5 here, off of another break, got people nacked. So this is exactly why that pattern recognition trading fails, because you got to do one of 2 things. Either you got to really religiously stick to it and implement it and go through a losing streak that maybe new according to your back end data, uh, which is very weird because you're forcing yourself not to adapt, which I find very, very strange. Or you just got to develop an edge that isn't plug and play, that isn't mechanical, but that you have an arsenal and that you actually kind of allow yourself to have numerous different ways of entering and exiting the market, and that you also know exactly the strength of each one. It's pretty much adding a whole layer on top of your trading arsenal. So pretty much what we're doing is we understand scenarios when we can do plays like this, right, that we're all familiar of. I think this is one of the most infamous strats just when it comes to SMC, ICT, liquidity concepts, that entire umbrella. Trading liquidity, sweeping. It's plug and play. You know, everyone does this. You know, combine this with previous daily levels, and you have more confluences. Combine this with higher time frame arrays, and you get even better confluences. Again, what we're talking about with the whole logic thing as well. Propositional logic is you want to make sure that you are stacking your odds in your favor. This is a prime example of how this is not stacked in your favor. Why? It's Monday. You've got you only got London session that's there. Overlap, sure, with Frankfurt and Sydney, cool. But you don't have any overlap from the aggregated volume from New York. So there's very little to actually get involved here. And that's just, you know, sure, there's going to be a setup every so often where it works and that it delivers, but you're not aiming to get that one setup, that one of the 10, 20 times that it does work, to make sure that you filter your entire process and know when not to do it, and when you are lucky enough to get the right one, right? One of the key things for the guys that know pressure and how I annotate pressure, the only time that I trade Monday London session is if there is an M15 or higher sign of pressure. In this case, there wasn't. You know, you could argue this, but this isn't an order block here. That's nice, and it didn't break any swing points, right? It would look a lot different if price came here, left behind an OB, took out this swing point, left behind pressure, and then you have that internal level, right? And this might already be way too advanced for you, but we'll get there. Don't worry about it. But then you have this internal level that really kind of acts as some sort of recalibration early in that London session. Whereas here you can see that, sure, we take out these levels right here, this level right here, but none of these levels hold any weight, right? That's kind of the issue. This one was close. If this one left behind an imbalance, it would have been a lot more viable, sorry, but it didn't, right? And then you can see that the late imbalance off of market close happened here, but it's not taking anything out. If anything, it's actually holding a bullish imbalances, bullish arrays right here. Whereas now you see that this play is coming in a little bit too early on the day. Something that we're looking at is taking out this internal buy side liquidity and then trading short into like daily levels as well. A little bit of a start of week, not really what I wanted to do, but let's kind of go over the trades that I fumbled last week. I took 2 L's last week. I took this was one of the trades that one of my students took. I took 2 L's last week, and I'll explain to you exactly where they hurt. They weren't the best, and it is kind of off the backbone. I'm not here to sweep them under a rug whatsoever, but I want you guys to learn from it as well, right? So kind of work your way back. Be a sponge in this scenario and work your way back. I'm just going to put my camera here. Work your way back. In that case, kind of reverse engineer it and see like what I did wrong. The opposite of that is how you could do it right. So I took a trade on Tuesday. I took this. I fell for it, right? I fell for this antic. Kind of the big difference that we had here is what you understood is we had this huge divergence between, I believe it was this point and this point, between DXY and EU, right? So I was already kind of like, I don't think that divergence is a make or break criteria, but I did get knacked. I should have taken this into consideration. I was too focused on execution timeframes, right? That was the biggest issue with all of this. You go into M5, and it's very funny. Practice what you preach. I just explained to you how Asia isn't nice. I fell for it. I did. I truly did. And this is exactly another example of what I did wrong. So I thought very, very nice. It's all quite in line. It started up very, very good. But kind of the issue, and this is already kind of giving you some technical gems that you may really want to note down. On M15, there's fuck all. Let's be completely honest. There's nothing. We're not sweeping. Sure, look, you get Asia low. You take this previous daily low, but it's insignificant because that previous daily low is not below Asia low, so you're not adding any confluences with that. We took out Monday's Asia low as well. Cool, sick. Not that relevant. But what actually was really nice is the fact that we didn't really take into account the fact that we were in like H4, H1, big imbalances. So I got knacked here. M15, there's nothing. There really is nothing that you should be looking at. Sure, maybe after you get this, you would have gotten knacked here if you wanted to trade that little area right there. Totally okay. Would have been more valid than the loss that I took. The loss that I took was on M5. That was this. And here, you can kind of already see where I'm about to go with this. We have a very, very nice BPR. Cool. And kind of, I made the mistake that I wasn't supposed to make, which was trading a BPR that doesn't leave behind an order block, right? So I was trading this. RR looked nuts. That played a role as well. I was like, holy crap, this looks insane. It was running very, very nicely, but you can see that I got in one prematurely. And this is kind of the mistake that many of you guys do. You're on M15, you see nothing, right? Then you go into M5 and you don't actually trade your model, right? Your model is here. So the model, this is your shift, right? But that doesn't mean that you can enter off of arrays pre-shift. And that's kind of what I did wrong. I just didn't listen to my model. I was way too excited, just with the new week and summer volatility going away and new volume coming in, all that good stuff, the whole yip yap. Because if this was my shift here, I would have been looking for entry criteria here, and I would not have gotten triggered, right? And then I would have just missed the trade, and then obviously here I wouldn't keep it, and I say that very easily in hindsight. I don't know, but it would fly without me a lot more than me chasing arrays here. What's wrong here? BPR, overlap BPR with no order block here. Preferably you want to see an order block here, right? That showcases that price does stagnate, doesn't have indecision here, right? Because what we actually see here is kind of like this V-shape aggressive imbalance to the downside, showing intent to go lower, which act as a protraction. That's a good sign, cool. But what we then want to leave behind is a shift. We want to see intent break that swing high in this case. But we also want to leave behind an order block in conjunction with an imbalance to the upside. Whereas here, all we did was kind of love tap into that BPR. Cool. No real intent follow through from that tap. So that's kind of a bad sign as well. And then we're kind of stuck here where price, obviously off the backbone of some Eurozone news, just slams. Could I sweep this under the rug of news? I could. Will I do that? No. All in all, this was a flawed entry on my behalf. M15 wasn't there. I should not have been on M5. So yeah, that's trade number 1 that I took that week. Trade number 2 was on a Thursday. But I just want to quickly showcase you guys Wednesday. Wednesday was a very, very nice day. Some guys traded Wednesday very, very nicely in AO in the group. Sorry, some guys traded this and then they traded, you'll see. So this was very, very nice. The only high probable move that entire week here was where an Asia play does pan out very, very nicely. But the Asia play wasn't there. I couldn't step into anything. Why? Because DXY had a overlapping volume imbalance here, which was sick. Very nice to go into Asia low. Very nice to go into previous daily low. This was the only move that you could read like a book last week. Likewise with the bounce back here and then the continuation here. Wednesday was the best day. I was behind screens the whole time and I didn't get anything, right? Here there was a continuation play. Here you could have gotten shift zone, which I didn't manage to get either. So it was kind of like adding piss to the pudding in that case, where messed this one up, read this like a book, didn't get anything. Even this, you know, not as if I got triggered in that. And then price delivered up until this DXY cross reference as well. So DXY taking out the lows, EU not being able to take this out. I take my words back here. Yeah, same. Not being able to take that out, and then it just plummets. So nice. There were guys that were trading this. They were trading continuations. Overall, I wanted one of two things. I wanted it either to come in a little bit deeper here, and then showcase some sort of intent to go higher. And then here, obviously, there was reversals that some people traded as well. Not my cup of tea to hold anything over Asia, because you can see exactly what happened here. This is blunder number 2. Absolutely fumbled here. Let's just kind of, the mistake that I did here, I did again, right? Absolutely lovely. There's nothing here on M15. I decided it was a great idea to enter, right? I thought it was great to get involved. So I'm just trying to find the wick. I think it's still a little bit later. Yeah, sick. I can see it. So beautiful. This is where the first Asia players got knacked, and I was thinking way too retail. I was like, oh, sick. I'm gonna get involved here. Pre-shift, no DXY confluence. Nothing. Absolutely nothing. You can hear the disappointment in my voice. I wanted this. RR looked good. Entered off the backbone of this order block with no continuation. So what is the rule? What do you got to note out? If you're on M5 and you're trading arrays, ask yourself, what the hell is that array doing? Is that array actually breaking structure? If not, don't enter upon it. Is it DXY cross-reference? You know, give yourself room for divergences. It's simple, right? It's really not rocket science. I say now, as I made the same mistake twice. Here we get 3 shallow shifts, and boom, then we get triggered out. Hard knock life. And then, lo and behold, on Friday it delivers, which is nuts. So those are kind of 2 of the main mistakes that I made last week. But now what I want to showcase you is the fact that all of this only costed me 1.1%, right? And instead of me like spiraling out and risking more and revenge trading, I really just managed my risk very well. And that's the only thing that you can control. The only thing you don't control when you win next, when your next win is, right? You control how much your ante is, how much you actually put into the market, how much you are willing to lose. So this morning I sent I sent a little pre-day ritual as well to AO, to my group, and I want to share that with you. So get your pens and papers out. And this is what we did at trading firms as well. When we were executing on the ladders, we had to put this out for ourselves, and it really makes you so much better. Trust me. And I do that. I don't do that, but I'm going to be doing it again because I felt like these tendencies, kind of these anchor points coming back to me during this period of time where I felt the need to revenge trade, and I want to avoid that by doing the following. And that is kind of taking out a sticky note, right? And writing the exact dollar amount that you are willing to lose that day. Write it down of whatever account you're executing on, and make it just one account and have that as your master account. If you're using numerous accounts, prop, whatever, that dollar amount then for the other accounts that are behind it, it needs to be a significant number that you can see. Doesn't mean that you got to go balls to the wall and make it 10%. That gives you all the space. Yeah, but that also then it acts as one of two things, right? It's a magnet, but it also repels at the same time, right? The issue, and this is where the sweet spot comes in. You want to be scared of that number, right? But you also want to be aggressive with it, knowing that you have that much space, and that's exactly how we traded on the ladders as well. So let's say you have buying power of like 80K, and you are allowed to lose, let's say, 500 or $1,000 a day. You know that if you only lost $200 a day, you still got game. You can still play, right? So you'll play, you'll play, and eventually you'll be a little bit more aggressive. But at the start, you want to make sure that you don't hit that number, and that allows you to become a little bit more aggressive. But it also just gives you a hard stop that so many of you need, right? I see so many people lose 3-4% in a day, risking 0.5% or 1%. Look, I'm not here to compare guys that shoot 2.5% right off the bat or that are gamifying props. I'm here to make you an actual trader. I'm here to make you consistent, adaptive, and have a portfolio that you can eventually manage in the future. The skills required to eventually manage a portfolio. So that's one. So if you're losing 3-4% in a day with normal risk parameters, you need to ask yourself a lot, and that's why people love people forget the numbers, right? You know, I've seen and I've been prone to so many big numbers at such a young age, and if you're close to me, you've seen the screenshots where I'm only 19 and I'm down 20-30K on a more on a specific portfolio, trading FX with normal risk parameters. So what I want you to do is really take that number, to post it on a little sticky note, right? And from there, kind of do that every single day, right? If you got a limit of $1,000 on Monday, take the sticky note, put it next to your screen, and do that again on Tuesday. Do the whole process of writing it down, right? And then maybe Monday you're not going to trade, Tuesday you're not going to trade, Wednesday you're not going to trade because you're like in this little deer in the headlights, right? Kind of you're just standing there and you're scared, and that's okay. And then slowly you'll start to incrementally increase risk, right? But also, if you put that number out there, it's tangible. It becomes real, and you're like, shit, this is actual money. Either, you know, proprietary or not, regardless, many people don't realize the numbers that are being thrown around. You know, compare that to your rent, to your groceries, to whatever obligations you actually have to provide for yourself, for your family. And then suddenly it becomes a lot scarier, right? If you got a 5-digit number on your sticky note and you realize, damn, that's half someone's, you know, annual wage, right? So keep that in your head. That's kind of practice homework for this entire week. What I want to be seeing is people with sticky notes on their screens. That'd be sick. I'm going to be doing it as well. Not that I'm trading, obviously, this London session, but with New York, I've got my dollar sign, preparing all my accounts. And yeah, I'll see you guys tomorrow. So hope you enjoyed. A little recap, little check-in. Chin up, right? We're not even close to finishing this sequence, and if you're already slacking, then I've got a bad feeling for you that it's not going to end well. So if you feel yourself slipping up now, yeah, recoup, recalibrate, and let's get cracking.